Typically, here's how it works. You give a hedge fund $1 million or $1 billion or any amount that you have that you want them to manage for you. And that's what they do. They invest it, they lend it, they use it for all kinds of purposes in the stock market, outside the stock market. Their number one goal is to make money by using your money. And here's how it works. The hedge fund or the private equity fund or the venture capitalist, whatever you want to call them, they charge you to do this. And they charge you on a system called 2 and 20. The 2 refers to the percentage of the money you give them that you have to pay them every year. So, for example, if you give them $1 million, you have to pay them $20,000 a year to manage your $1 million. So they get 2% of the money you give them, the money under management that they invest for you. But they also get 20% of any gain. Whatever they make for you, 20% is their fee. So they get 2% of the amount you give them plus 20% of the increase they achieve by hopefully successfully investing your money. So I hope that's clear. If it isn't clear, don't feel bad. It just means you're not among the very rich people who has need for services like this, and I want to be the first to offer my condolences for that sad fact about you, as it is also, of course, a sad fact about me. Anyway, why am I telling you this? Because in 1993, a wonderful law was pushed through the Congress of the United States by these kinds of enterprises. And here's what the law said. The first 2% of the money that is given to a hedge fund, the people in the hedge fund have to pay the regular rate of income tax on that 2%. Just like you get paid your salary and pay income tax on it, and somebody who paints your garage and is paid by you has to pay income tax on it, so do the hedge funds have to pay income tax on the 2%. And here comes the fun part. They don't have to pay income tax on the 20% of the gain. There, the law says, they're allowed to pay the much lower capital gains rate of taxation. In other words, this is a bill that gives the richest people in the world and the folks they hire to manage their money a tax break. Oh, goodness. A tax break for the richest and for the firms that cater to the richest. They get a tax break. It's worth, depending on who you listen to, between $20 and $200 billion a year that the federal government doesn't get from them. And I'm not even talking about what state governments could get. So we're talking about an enormous boondoggle given to the richest. The bill was passed in 1993. That means we've got 25 years now that we have had something which almost all serious observers believe is a gross boondoggle that has been given to the people in our society whose wealth means they need it least. And it has cost the government of the United States over those 25 years upwards of $1 trillion by many estimates of money not available for countless other social needs in order to make the richest amongst us richer still. It is an object lesson in who runs this government, how they make the government work, so that the next time you hear one of these folks tell you, everything we did is legal, please remember they are the ones who write the laws, which they then claim they are abiding by.